Welcome back, everyone. Today, we are talking about a huge shift happening at Apple, literally the world's most valuable company. They've just announced a new CEO, and this massive change comes just days before a super high-stakes earnings report that could really define their next chapter. So, we're going to break down who's taking over and then dive into the big fight between the bulls and the bears over Apple's next move.
Okay, so let's get the timeline straight, right? The big announcement dropped on April 20th. Then, come September 1st, John Ternus is officially in the big chair. But, and this is important, don't count Tim Cook out just yet. He's actually sticking around, moving into an executive chairman role. That means his steady hand and, all that experience will still be helping to guide the ship.
So here's our game plan for today. We'll kick things off with what this new era at Apple really means. Then we'll get to know the new CEO, John Ternus. We'll take a look at how Wall Street reacted, or maybe how it didn't react, and then the main event, a deep dive into the bull case and the bear case for their crucial Q2 earnings. All right, so first up, let's meet John Ternus, the new guy taking the reins at Apple. Okay, so who is this guy? Well, Ternus is a hardcore hardware guy, through and through. He's a mechanical engineer by training, and he's been at Apple since way back in 2001. I mean, think about that. His fingerprints are on pretty much every iconic product of the modern era. We're talking iPhone, iPad, Apple Watch, and maybe most importantly, he was the mastermind behind the Mac's incredibly successful game-changing transition to Apple Silicon. This is a product person, right down to the core.
And here's a fun little piece of trivia for you. Ternus is going to become CEO at age 50. What's so special about that? Well, that's the exact same age Tim Cook was when he took over from Steve Jobs back in 2011. Kind of feels like history is repeating itself in Cupertino, doesn't it?
So you think a CEO change at Apple would cause chaos, right? Well, how did Wall Street react? Honestly, not with a bang, but more with a shrug. Let's look at why the market isn't panicking.
The market's reaction was just incredibly calm. I mean, look at this. On the day of the news, the stock actually went up about 1%. And in after-hours trading, it only dipped a tiny bit. So what's the takeaway here? No panic selling, no major alarm bells going off.
And this really gets to the heart of it. The consensus on Wall Street is that this was a very carefully planned handoff, not some kind of crisis. This quote from Citi sums it up perfectly. Ternus is seen as a predictable, safe hands candidate. In other words, he ensures continuity. This isn't a pivot, it's just business as usual.
So here's the crucial point. The CEO news, it's actually kind of a sideshow. The market is really holding its breath for the main event, and that's the upcoming Q2 earnings report on April 30th. That is where the real story is going to be.
Okay, now for the fun part. Let's start with the bull case. This is the argument that Apple is about to have what they call a beat and raise quarter, meaning they'll exceed expectations and guide for an even stronger future.
The entire bull argument really starts with one absolutely jaw-dropping number, 76.5%. What is that? That was the gross margin on Apple's services business last quarter. The App Store, Apple Music, all that stuff. It means for every dollar they make from services, over 76 cents is pure profit. It is a cash printing machine, and it's the heart of the bull case.
So the bull case really stands on 4 key pillars. First, they're betting on a huge iPhone 17 supercycle, pointing to data that shows a record number of people are ready to upgrade. Second, they believe that incredibly profitable services division can easily soak up any rising costs for hardware. Third, bulls just love Apple's capital-light approach to AI, integrating it smartly without spending billions building their own models from scratch. And finally, with over $100 billion in free cash flow every year, the company has this enormous safety net under the stock.
But of course, there's another side to this story. There's a really compelling bear case that argues the company is priced for absolute perfection in what is a deeply imperfect world. And they see some serious headwinds that could threaten Apple's flawless run.
The bear argument kicks off with this number, 30. Apple stock is trading at roughly 30 times what analysts expected to earn next year. That is a premium valuation. It basically means the company is priced for perfection. At a level like that, there is absolutely zero room for error. Even a tiny stumble could send the stock tumbling down.
So the bears are pointing to 4 major headwinds. First, margin pressure from the rising cost of memory chips. That's a key component. Second, that sky-high valuation we just talked about, it just leaves no margin for safety.
Third, they see continued weakness in China, where Apple's facing tariffs and really intense competition from local brands. And finally, they're worried about supply chain issues, specifically whether their partner TSMC can even produce enough of the high-end chips that Apple needs.
So, it all comes down to a few key areas where these two powerful stories collide. These are the deciding factors, the battlegrounds that will really determine Apple's next big move.
And here is the whole debate in a nutshell. It's a battle between the sheer power of Apple's software and services ecosystem versus the really harsh realities of the global hardware market. Will those amazing services margins protect profits, or will rising component costs finally squeeze them? Is China a story of record-high upgrade demand, or is it a story of mounting risk? And is that high valuation a safety net because of all the cash, or is it a major liability waiting to blow up?
And that really leaves us with the one central question that this upcoming earnings report is going to answer. When those numbers come out on April 30th, are we going to see Apple's cash printing machine just overpower these very real pressures on its margins? That's what everybody is waiting to find out.
So that's the battleground for Apple as we head into earnings. If this explainer helped you get your head around the stakes, do me a favor and hit that like button and definitely subscribe so you don't miss our next breakdown. We'll be right here to unpack the results. Thanks for watching.